Our first speakers today are from Ameritas. Now, for those of you who don't know Ameritas, Ameritas has really stepped up, or they've been in the game, and now they're more in the game. They're a mutual company. That, as anybody that's been in the insurance business knows, that the mutual companies have fared much better than the non-mutual companies, and their portfolio is terrific. And as we start looking at that life portfolio, we think that you guys should take a look at it and understand the consumer may and may not have heard of Ameritas or many of the companies that we're going to have today. The consumer's only hearing what's on TV and what's being blasted. So with that in mind, I'm going to hand over the mic to Christy and Elizabeth to talk more about Ameritas and their product offerings. And if you have any questions during this presentation whatsoever, please post them in the chat box. I'm going to try and keep up with it, and we'll make sure that we get all your questions done. So thank you, and take it away.
All right, thank you. We appreciate your time today. I think what I'll do, if it's okay with everyone, I will share my screen so I can go through a few slides. We can talk about the product portfolio. I'd like to go just a little bit into underwriting and electronic applications, and then I'll leave a few minutes for Liz to wrap up at the end, if that's okay with everyone. I am going to go off camera in just a second when I share my screen. It just helps with broadband width. But again, I'm Christy Burrish. I am the internal wholesaler for the Northeast region. Elizabeth Riley, also online with us today, is the Regional Vice President for the region as well. So we're really excited to be here, and we appreciate Neil inviting us to meet with you all today. So let me go off video really quick, and then I'm going to share my screen. I don't use Zoom a lot, but it seems to be pretty self-explanatory. So let's look here. There we go, share. Whoop, that's not what we want. How about that? All right, Neil, can you see my slide okay?
Looks great, thank you.
Perfect, thank you. Well, you know, the thing that we like to talk about here at Ameritas is having a broad product portfolio that's truly going to meet your clients' needs. I came from a carrier in the past where we were, you know, basically a one-trick pony, always trying to make that one product fit all of your clients' needs. And what I love here at Ameritas is, again, the wide variety of product solutions that we have for you and your clients. Now, the one thing that you'll want to know about our company is the naming mechanism of our products. We really help guide you on what's going to be best fit for your clients. If it is a product that has the word Value Plus in it, you're going to know that that is a protection-based product, really more death benefit focused. If it's a product that has the word growth or S in it, you'll know that we are definitely gearing that more toward cash accumulation for potential income down the road. Just real quick, we have 3 whole life contracts. We have 2 IULs, a fixed UL. We have term. We have variable for outside of the state of New York. And then we have a new survivorship product that we're waiting to get approved in New York as well. But what I wanted to start with is just our term portfolio, because we know that term sales are a huge part of a lot of our businesses, and we want to make sure, again, that we're getting those clients proper protection. We do 10, 15, 20, and 30-year term. We have a variety of rate banding that obviously helps for your clients that are, you know, buying larger amounts of term insurance. The one thing that Neil mentioned just a few minutes ago was convertibility. And I want to spend just a minute or two on our term convertibility. What we have with our Value Plus term is base policy conversion of 5 years. Now, that's nothing too exciting. It's base. It comes automatically with the policy. But for a very small additional cost, we actually have something called our conversion extension rider. That can be added that will extend the client's conversion period to the end of the level term or age 70, whichever comes first. What we love to talk about is all of our permanent products are available for conversion at that time at the same underwriting class that they were approved as on their Value Plus term contract. Now, they will convert at their now attained age, but we are locking in that underwriting class, and we're giving them all of our products as their choice, not one conversion product that is, more highly priced to accommodate those conversions. We are giving those term clients the exact same term portfolio as a new client off the street. We're so excited about convertibility, we will even give that client a conversion credit. That's going to be equal to the last 12 months of their term premium paid, and we'll put that as a credit toward their new permanent contract. We will even comp you a small amount on that credit, even though that is not money that the client has to come up with. We have a variety of discounts available. Approved associations, producers like yourselves, and employees do get a 4% policy reduction on their fees and their modal factors. The one that we see more is the same payer discount. I'd like to pause just a second on that. So if you have two policyholders, whether it be spouses, whether it be business partners, maybe life partners, any situation where you have two individuals buying term, but the contract is going to be paid for out of the same account, so the same checking account, let's say, we will cut the policy fee in half. So instead of an $80 policy fee, which is built into our term contract, it would be a $40 policy fee for each of those clients. So on the term front, $40 annually can actually be quite a savings. What I would like to do is have everyone on the call take a quick snapshot of this URL that's listed on your screen. This is an online term quoting engine that you do not need to have a user ID or a password to access. Go ahead, and again, if you have your camera handy on your phone, just take a quick picture of it, or again, just jot that URL down. This is something where you input your client's date of birth, if they're a tobacco user, the state, the gender, how much you'd like to quote. And when you hit the button that says Get Quote, you're going to get the output that's on the right-hand side of the screen, which is really good information. Because not only are you giving all four of, let's say, our non-tobacco rate classes, which are listed in order. We have 4 non-tobacco classes. The best is Preferred Plus, second best is Preferred. We also have a Select non-tobacco category, and then our Standard non-tobacco category. On the term calculator, you'll get 10, 15, 20, and 30 year listed all at one time. Plus, please note the price difference on your screen between the base policy cost and the little bit extra that it costs to add that conversion extension rider. So as you can see, for most of your individuals, you're probably going to want to include that extension rider. That just gives that convertibility, like I said, all the way out to the level term period or age 70, whichever comes first. We love conversions. As I mentioned, we have 3 whole life contracts: Access Whole Life, Growth Whole Life, and Value Plus Whole Life. Again, that naming mechanism is kind of going to give you a good indicator as what the product focus is. If you look at our Value Plus Whole Life, that is going to be our lowest cost, protection-focused whole life contract. If you look at the Growth Whole Life, that's going to be for folks that are looking for cash value accumulation for the long term, maybe supplemental retirement income as an example. Access Whole Life, those are going to be for individuals looking for early year cash value growth. Definitely liquidity throughout the contract, but really focusing on death benefit, cash value access in the short term. I'm not going to go through all the product specifications on those 3 whole life contracts, but as you can see on our screen, we do offer issue ages 0 to 85 typically. We are in our COVID underwriting guidelines right now, so we are cutting off at age 79 until such restrictions are lifted. We do have a minimum death benefit of $25,000. That's on our standard classes. $100,000 is going to be the minimum death benefit for your select and better rate classes. We give all the bells and whistles that you're normally used to seeing with whole life, all the dividend options. We do have our loan structures. You can do fixed or variable depending on the product. We do have premiums payable depending on the product type. So for instance, the growth has a 10-year funding option or a pay to age 100. Value Plus is a continuous pay product. And then the Access Whole Life is a pay to 75 or a 25 pay. One of the things that we do talk about with our whole life contracts is the ability to fund extra dollars into those contracts. That is utilized by using our flexible paid up rider. Paid up additions is a great way to overfund your whole life contracts for your clients. Depending on the product you choose, some have a little bit, we've got some flexibility on all of them, but it's more flexibility on the Access Whole Life. We do have some scheduled maximums that we need to keep in mind. And then again, we can only go for so long without funding that paid up additions rider. Flip side, we do offer a fixed universal life contract as well. That is our Value Plus UL. People will like to pivot to that when whole life is maybe a little out of price range for some of your clients and you're looking to get into a permanent contract, but maybe not the indexing option that we'll cover next. This is going to be, like I said, a fixed rate UL. We have minimum death benefit on this of $50,000, select or better $100,000, death benefit options A, B, and C. Death benefit option A is a level death benefit, B is increasing by the cash value amount, and C is also increasing, but it increases by the premium amount. We do have premium expenses that are built into any universal life contract, and we are at we do offer a 3% guaranteed interest rate. We did just have an interest rate reduction, and we aren't unfortunately that far away from the guaranteed interest rate at 3.7 presently. 3 index UL contracts. 2 of these are available in New York. The SIUL product is actually pending approval, but I will quickly mention it. With our IUL contracts, all of the index strategies that you see on the screen, with the exception of the BNP Paribas, is available in New York. So we have our S&P 500 index choices, our Russell 2000, and then we also have an international indice as well. Simply put, we offer 2 individual IULs. The Value Plus IUL is going to be a lower cost policy with death benefit focused. It does have a no lapse guarantee to age 90 or 50 years. This is going to be the closest thing that Ameritas has to a GUL, but we do feel that it's a nice GUL alternative because of that age 90 no lapse. As we all know, age 90 will get our clients out through life expectancy, and since it is on an IUL chassis, you still have that upside potential, and then coverage beyond age 90, provided that we have funded the contract properly. Now, the growth IUL, that is going to be our go-to IUL for max funding scenarios. This is going to be the best accumulation potential, highest cap rates. We have a lifetime income rider, part of that contract, which is kind of a neat product feature to speak of. For your clients outside of New York, we do have a 4% look-back guarantee for the first 10 years. New York didn't like our calculations, so we don't have it in the state of New York, but we have the product all the same. The growth IUL has that same minimum $50,000 death benefit as the fixed UL contract. It does offer the options of A, B, and C for your death benefit options. It does have a smaller no lapse period. It is a minimum of a 10-year no lapse. Again, the same type of policy expenses that go into it. We do offer an index credit enhancement, and this is available in New York. Starting in year 6, all of the index accounts do get an additional 10% of any index credits paid. So I do like to offer that to our New York folks. Like I said, the one feature they did not like in the state was that 4% look-back guarantee. But if you are selling outside of New York, keep in mind we do have that 4%.
How does that work?
The value.
Excuse me one second, Christy. How
Yes,
does that
go ahead, Neil.
4% guarantee? How does that 4% guarantee work? Just explain
What
that.
it is at the end, yep, I will. At the end of, or at the 10th policy anniversary, so at the end of the 10th year, we will basically look and see what did the client actually receive as an average annual return.
Okay.
If they have not received 4%, we will actually credit dollars, Neil, to the account value as if
big.
they made 4%. It is big. New York didn't like the calculation that it took to the end of the 10th year to do it. Anyway, but we do have it approved outside in all other 49 states. Good question, though. Value plus IUL, like I mentioned, what we really like to talk about with that contract is the no lapse guarantee feature. It does offer that age 90 guarantee, which again, for those of you that sell GUL, this is going to be, like I said, that closest alternative to a GUL in our product lineup. What you're going to also want to know is we offer all the bells and whistles that you are used to seeing with your IUL contracts. Most all of these are approved in the state of New York. If it's not available, it is noted on the slide. We like to talk about that lifetime income rider. And I do want to point out that that is something you don't see a lot of on index ULs. It's definitely something that is a great talking feature. You can still do your traditional withdrawal to basis and loan strategies to access money, but we also like to give that client an alternative, which is basically taking their account value at time that they'd like to turn on that lifetime income, set income that they can outlive, and then know that the policy will never implode because we do freeze. We have a threshold death benefit amount of $15,000. So what happens is even if they exhaust all of their account value, take every last dollar of it, we will still freeze that death benefit at that threshold amount of $15,000. The policy will never lapse. Things that, like I said, things that we like to talk about, the Care for Life benefit, I will talk about in just a moment. That's our accelerated death benefit rider. And then we have some of the basic ones: accidental death, children's insurance, guaranteed insurability, overloan protection for your loaning strategy, and then waiver as well. Loans are available. Obviously, we have both a fixed loan structure and a variable loan structure, totally client's choice. We like to offer that flexibility, and then do know also clients do have the ability to switch between those loan options as well. For those of you in the survivorship market, please know that we have a second to die IUL filed in New York, and it's also filed in California. We're pending approval for both of those states. For the other 48 states, we do have our survivorship available. We launched this just a few months ago. This is going to be your second to die IUL. death benefit will obviously pay on the second insured's death, and this has a really nice dial a guarantee feature. So the no lapse, what I love on this contract is you can actually choose it. If you want an age 90, a 95, however you want to do it, you can dial in that guarantee with the no lapse feature. Something that is available on all of our permanent products is our accelerated death benefit rider. We market this under the name of Care for Life. Care for Life actually includes 3 qualifying event triggers: critical illness, chronic illness, and terminal illness, all included in one rider. It is a free rider, automatically put on all of your permanent contracts as long as your client is a Table D, like David, or better. So at issue, as long as they are Table D or better, or that's a Table 4 or better, they will automatically have this rider attached to their contract. It is no cost. It is only if they use it that they will actually pay a small administrative fee. And then what happens is at time of death, the amount that we accelerated comes out of the death benefit plus interest. We are using the lean approach on our accelerated death benefit rider. What's nice about that is it's predictable as far as the dollar amount available at acceleration at time of claim. For your carriers that are using the actuarial discount, we know that at time of claim, there's underwriting that happens again, life expectancy is recalculated, and you may not get the full percentage that is advertised on that rider, depending on the individual client situation. Ours is very simple and straightforward. 25% of your death benefit capped at $250 is available for critical. 50% of the death benefit capped at $1 million is available for chronic, and then 75% also capped at $1 million available for terminal. The critical illness triggers, I do use these slides in the entire Northeast. So outside of the state of New York, the critical illness triggers and events that are on the top half of the screen would be included. New York, if you look in the gray box, you'll notice that they have a shorter list of critical illnesses, but in a way they're actually a little broader. So I did want you to know that we do have a separate list of critical illness triggers in New York, but again, definitely use this, and it's great to talk about with your clients in case one of these, instances happen. They know they've got some money that they can access. What people like to talk about more actually with this rider is the chronic illness portion. This is actually the inability to perform 2 of the 6 activities of daily living. If your client is unable to perform 2 of the 6, they're able to accelerate up to 50% of their death benefit. We pay this annually up to the HIPAA limits for the year. And again, it is not underwritten. So as long as their doctor attests at time of claim that they're unable to do 2 of the 6, they're able to get those dollars advanced to them. This is indemnity. It's not reimbursement. We don't ask for receipts. We are not asking at all how the money is spent. Terminal illness, that one's pretty common. Life expectancy of a year or less. You can accelerate up to, again, 75% of your death benefit. We do cap it at $1 million. Pivoting from product, actually, Neil, I was going to pivot really quick from product into some underwriting. Do you have any product questions you want me to address before I move on to underwriting?
No, terrific. Thank you.
Okay. What I'd like you to know about Ameritas is we do offer accelerated underwriting. This is something that we actually launched at the beginning of COVID. It was just actually crazy timing. We had accelerated underwriting in the works. We were doing some, systems work and things like that, and COVID kind of pushed our hand a little bit, and we launched it at the beginning of last year. So what this is for your clients that truly are standard or better. So we're looking at no major medical conditions, things like we have to have good financial underwriting guidelines. They can't have bankruptcies in the last 5 years. We don't want to see for this program no hazardous occupations or avocations, no DUIs in the last 5 years, no drug or alcohol dependency history. You cannot have had a prior rating or decline coverage. This is for your clients 18 to 60. This counts for both term and permanent, up to $1 million of face amount. So what's great about this is it's no labs, no medical. You actually can get all of your underwriting done without any type of lab work or APSs. Again, remember that it is for your clients that are good. Think of your folks that are standard or better and that meet the good financial underwriting guidelines. Because when we do run the financials, obviously anyone with bankruptcies or any kind of adverse credit history is going to be kicked out of this as well. So if you combine our accelerated underwriting with our electronic application system called eApply, we really have, put our arms around an entire virtual experience, because like all of us are meeting today during this meeting virtually, you can actually do our entire application process virtually as well. Because with the eApply system, we are looking at our online portal, which is available on Producer Workbench. This is our agent portal. Once you are appointed with us, you get an agent number. With that agent number, you have access to this website. With a click of a button, you can be in our electronic application system. You will answer all of the questions. You can either do that with your client over the phone, or you can, shoot them over a link where they actually data collect some of the information. That's between you and your client. Once you have all the information collected, it will basically ask you a couple of things in that application. First of all, it will ask, are you doing accelerated underwriting or are you doing traditional underwriting? I always want to point out to people that you can't flip-flop between the two. You can't ask for accelerated and then maybe try to go down the traditional path to get a better offer. You do make your decision on which underwriting path you want to go down at time of issue. The other thing we're going to ask you during the electronic application process is, do you want an electronic policy? So not only can we do the application electronically, we can also offer you an electronic policy. This is a choice. You don't have to do an electronic policy. If you still would like a paper policy to deliver to your client, we're at this time still offering that. We know a lot of people still like that tangible, bound policy. Otherwise, if electronic is within your clients, if that's acceptable to them, you can also do an electronic policy. If you are appointed with us and you'd like to click onto our system, we do have a simulator that you can access that basically lets you play around with the system to see how the electronic application and electronic signature process actually works. We have an entire sales development department. I am an initial point of contact. I always tell people, though, I'm one person, and if you need an answer maybe right away, we do have a sales team that can help with product questions, illustration support, really your go-to department for really all things at Ameritas. That number is listed on the screen. What I would like to do at this point is turn it over to Liz. That way then she can offer closing comments, and I'm going to quit sharing my screen at this time. Thank you, everyone.
Thank you, Christy. It's terrific.
Thanks, Christy.
Thank you.
Yeah, Christy's one of our rock stars at Ameritas, so we'll be taking advantage of her as we onboard you and get you trained. But I just want to say thank you so much, Neil, for inviting us to your forum today. As Region Vice President for New York, I'll be partnering with Neil to help his agency connect to all the resources that Christy alluded to, and we're available to help with things like contracting agents, providing training on demand, business development. So as you know, all agents contracted with Neil's agency will have a dedicated new business case manager, a dedicated underwriter, which is a huge win, of course, for you and your business. So thank you, Neil, for inviting us to your forum today. We hope to be working with many of you soon in the future.
And what I just, as a couple other little recaps, it's about the people. And whenever we call Ameritas, we always have helpful people in this crazy day of doing business, working with companies. We want to work with companies that work with us. And so we're very excited to have you. We've also been looking at their premium finance platform. Their product is terrific for premium finance. We're finding in New York, their product is very strong, one of the strongest out there. And they're very easy to work with, terrific people, very in-depth portfolio. We're very excited to really have a big launch with Ameritas. So thanks again. I appreciate it.
Thank you.
Thank you,
Does anyone
Neil.
have any questions at this time for Ameritas at all, for our speakers?